So I did have to restart the recording there because the time frame that I was looking at did not offer the 5 minute as the data was too old, which is okay. So we can just start that over again. We'll start doing our analysis for the week on the daily. Okay. This is Monday. This is not good. It's not what we want. Don't look at that. Don't look at that. Okay. Boom. So this is Thursday. Let's look at Friday. Perfect. Okay. So this is the end of the week and we're doing our analysis for the beginning of next week. What do we have here? We have prominent liquidity that did get swept and had a strong reaction off of it, right? And we did have a bullish close. However, it's a lot of indecision. So what we're looking for here could be just continuing on shorts, right? But what we do want is price to come up here, take this high of the day, daily high, and then continue going down because we are still in a very heavy downtrend on the high time frame. On the daily time frame, rather, right? So what we can do is we can take this, mark it out as a liquidity sweep that's already been swept, and then we can hop on the 4 hour. Okay, let's also hop to, there we go. That's fine. Yeah. Okay. So here we can start marking out some of our lower time frame confluences. So any fair value gaps? No, not really. It's just kind of chop. This is what you would call chop market conditions. What we can do though is we can mark out other draws in liquidity, right? We have this draw in liquidity. Like you want to mark them all out. This is on the higher time frame to hold more power. This draw in liquidity. And this draw in liquidity. I'm pretty sure there was an SMT here as well. I don't really remember and I'm not going to check. Sweep. Sweep. And we're going to lock these guys up as well so I don't accidentally move them out of place. So this is telling me that I maybe want to be looking for a little bit of a reversal here, right? So we'll mark this guy out right here because this is our next draw on liquidity. Not draw on liquidity, sorry. Major liquidity point for our sell side liquidity. Wait. Yes, this is the sell side liquidity. I'm always checking that, I swear. So I actually don't need to mark that out with the trend line tool because it hasn't been swept yet. Cool. Let's mark that guy out. Let's lock it up. Okay. So that's where we are on the 4 hour. So what we can do is hit over to the 1 hour, start looking for other confluences. Let's also mark out our market open. I guess I'll do that real quick in that half hour because 9:30 is our market open, not 9. Lock that up. Perfect. And yeah, so we see a lot of rejection here off of this liquidity. See how we tap into this liquidity and run up? Cool. So if you want to be looking for a trace today, we're probably going to be looking for, okay, I'll kind of break here. Let me actually open this indicator for you guys. So this shows you your draw on liquidity for free. Go over to indicators and look up ICT kill zones plus pivots by trade for op and just click on it. And it should show you some of these cool little purple things, green, not green, blue, red, whatever. So basically what this is showing you your draws and liquidity for the day. So this right here is your most prominent draw on liquidity. It's going to be the highs and lows of the previous sessions for that day. So these are your, like, pretend these are magnets, bro, because you'll go through it day by day where liquidity gets swept at these points and it'll reverse off of it. So you look at Friday, liquidity swept here, runs down. On right here, liquidity gets swept on the London low and goes up. Like it's literally a magnet. It's actually kind of nuts how accurate it is. Asia high liquidity gets swept, goes down. Like it's literally, you can't make it up how often this stuff happens. So what I like to do is like to take my, what is this, ray, horizontal ray tool, hold control to have the magnet, put it out for me and mark out each liquidity that didn't get swept yet. So here's London high, didn't get swept. Asia high didn't get swept. Asia low did get swept. So I'm not going to mark that out unless I want to do it like this with the trend line tool. You know, it's useful to have. I'll do a sweep. I guess I could type in here a swept, oops, swept Asia lows. Can lock it up here. And we also have our New York lunch lows. So you just say there's NY lows, lock it up. And then right here, Asia high, lock it up. So I don't accidentally move that out of place. We can do this London high, lock it up. If you guys are wondering how I'm getting these types of shortcuts, I'll break that down for you in a second, explain it to you guys. And then we have our New York highs up here. Lock it up. Okay, cool. I'll just delete the indicator now. Don't need it anymore. Have everything marked out for the day. And I'll tell you guys how to do that shortcut real quick. So take your like trend line tool, double click on it, and type in the text of the type of, you know, high or low you want it to have, right? And the most important thing that you want is for it to be on middle and right. You don't want it to be anything else, because let's say if I put on center, look what happens. It like starts moving all over the screen. If you're like trading, especially on like a lower time frame, right? Like you're like really focused in. You don't want to be like looking for this and like on your screen. You don't want that, believe me. So what you just want to do is keep it on the right. Copy these exact same settings that I have for you guys, and you should be good. So yeah, that's it. Anyways, let's look for a trade. Right, I'm gonna delete this. I don't usually have that up, and I don't need that. So let's go back to the high time frame and let's look for our buys. So first things that we need to identify is what type of trend we are in the higher time frame. As you can see, so let's hop on the 4 hour. On the 4 hour, we are in a downtrend. So meaning we're looking for shorts. Let's go on the 1 hour. 1 hour says we're also in a downtrend because we did break below this last low, right? Breaking structure towards the downside. Again, if you want a more simple way to look at things, you can use the line tool as well. I like to have it favorited to take away some of the noise and simplify what I'm looking at, right? Anyways, so remember, this is not a breaker structure on this point right here because we do need to break beneath the previous wick, not body. So it's not breaker structure on this point, but it is over here. So we're in a downtrend on the 1 hour, okay? Meaning we're likely looking for shorts. Then again, it's 5 a.m. We have not even gotten close to the market open. So let's move a little bit towards the future. Okay, boom, right? We're still looking for, I guess you can mark this out and draw of liquidity as well, right? So there's two types of trades that we can be looking for here. That's our fair value gap, our 1 hour fair value gap. Super helpful to have. So I guess we can go ahead a little bit as well. Okay, perfect. Now we broke structure towards the downside. So, and this is kind of like invalidated hella. We are going to be looking for shorts until this drawn liquidity up here, or a reversal until this fair value gap up here, or until this drawn liquidity, right? You can mark that out as a previous high, right? Now let's hop on the lower time frames. So now we're entering the half hour and we're waiting till market opens. All right. Boom. Let's get to work, baby. Oh yeah, first thing as well. I want to show you guys this real quick before we start. This is called the macro. I'm going to show you guys right now. So macros are time zones where price wants to target something. There's a bunch of different types of macros in different time frames and time zones and different sessions. You don't really need all that noise. You need to know one thing only. From 9:50 until 10:10, if you take trades during this time and really watch the market, you'll see that price during this time always wants to take out a drawn liquidity or an imbalance. It's like 90% of the time it always does. It always plays towards something. You will see price aggressively move between these times. So some people, including myself, prefer to wait until 9:50 for price to want to target a certain area, drawn liquidity, confluence, imbalance, whatever you want to call it. Anyways, so we've established our daily bias, right? It's going to be short. But what do we need in order for that to happen? We need a liquidity pool to get taken and then a confluence to confirm our entry, right? If we want it to go long, then that means we'd be playing a reversal because we're in a downtrend. So in order for us to keep going down, we need to go up, right? That's the leg that we would be catching if we were to take longs. Meaning what I would want to see was for us to tap this liquidity pool down here and for us to look for a couple of things. If we find an SMT on ES, amazing. That's one extra confluence for us to go long. Let's just say we have a fair value gap that gets formed right here and it gets inversed. Boom, another confluence for us to go long until internal liquidity. We want to take our profits there. Remember, we can't hold it for too long. We're still in a downtrend on the higher time frame. So therefore, our lower time frame trade will be taking the reversal, not reversal, sorry, the Is it called reversal? My brain's not burning right now. The rebalance. Okay, like I said. Okay. Listen. Let me draw it out for you guys. This is the higher time frame. Us going down. Okay. Let's say we were to take this part right here. Okay. And let's say this is the lower time frame, and that's what we have right here. We want to catch the leg up before the leg back down to continue the trend. That's exactly what this is. Take the internal liquidity and then for us to keep going back down, since we are still in a downtrend on the higher time frame. Those are essentially the two types of trades that we want to be looking for during this session. So let's watch it play out and see what happens. So we have our draws and liquidity marked out. Let's mark out our fair value gaps as well. We do have our 1 hour fair value gap up here marked out, as well as not much else because it's pretty wicky today. So these market conditions are a little bit chopped, so we don't really know what we want to be looking for here today. Like this is maybe even a day where you don't take a trade. Let's watch, see what happens. So we have an immediate move down. And we're likely going to take this liquidity down here. Still waiting. Didn't take the liquidity yet. Maybe we took it on ES. I'm not too sure. Still waiting. Boom. See, did you see what happened there? I'm going to show you guys something. Do you see what happened here, guys? I know what you guys are thinking. Okay, so we have a move back up. We're almost about to break structure, and we inverse with this fair value gap. Guys, it's longs. Let's take longs, guys. Everyone hop in longs. Guys, quickly put our stops beneath this low, and then this target, internal liquidity RPO. Guys, longs. It's longs, guys. Boom. Taken out. Because you didn't wait until the liquidity sweep. This is what patience means within trading. This is how patience plays you out. Okay? Now we can look for longs. Okay. We have our liquidity sweep. Let's hop in the lower time frame. I can't go in the 1 minute, unfortunately. Can I? No, I can't. So we have this really nice rejection. Look how it's just wicks in this liquidity pool. But now we got to wait for more confluence. Okay. See what happens if I would have just taken the trade purely off of the liquidity sweep. You would have just gone taken out. That's why I need to wait for additional confirmation. Okay. Here we go. Had a little bit of chop right here. Oh, there we go again. See this fair value gap right here on the 5 minute gets respected and not inversed. Therefore, we keep going down, right? A little bit of a chop fest today, right? So this wouldn't have been a day if you were to trade the type of confluences that I had just showed you, where you wait for that liquidity sweep. However, we did tap into. See, remember how I said you want to draw all the pools of liquidity, all the liquidity points? So we tapped into this one right here. Let's see, because it's still 10:55. Generally, we want to be trading between 9:30 and 11, but you can't kind of push it a little bit more because you don't want to go into 12. 12 is when lunch starts. You don't want to be trading during that time at all whatsoever. But if you do happen to find yourself an entry before then you could potentially stick within a trade. Anyways, let's see if we have a little bit of more confluence right here. Okay, we have a liquidity sweep. We have a fair value gap right here. Obviously, we wanted to get inverse. We're on the 3 minute right now. We wanted to get inversed because we're looking for longs. We also want our structure to break towards the upside, which will be right here, our most recent high. Okay. Perfect. The fair value gap gets inversed. Okay. We can also wait for that break of structure for additional confirmation. Price is just ranging. This is exactly when you don't want to be trading, when price just ranges and just kind of trolls you. See, this is bad price action. You don't want to just look how slow it's moving. So within how long has this been? Half an hour? It's came up about like 80 points, but ever so slowly and really sucking you out and wicking you out. Let's wait for that structure to break. Boom, perfect. Okay, so if you would have taken the trade purely off of the IFVG, inverse fair value gap, you would have had your stops at these recent lows, and you would have targeted, let's see here, this this internal liquidity. It's the previous, most recent prominent high. Or if you would have taken it off of this break of structure, that would have been a pretty bad risk to reward. Maybe you would have moved your stop loss beneath this inverse fair value gap. See how you can kind of manage your trade a little bit. You have to practice it in real time and get some experience to be able to fully know what you want to be doing. Anyways, let's just pretend that we took the trade off of the IFVG and we didn't wait for the break of structure. But maybe we got a lower time frame break of structure. Let's see. Not really. This wick is really pushing it here. Maybe we got a 1 minute break of structure. I'm not sure. Whatever. Okay, let's just see what happens. Yep, taken out. See what happens at 12, guys? Let me show you. At 12, it's unpredictable. Like, see how everything is going good, and then maybe here you would have gotten a nice retest and they keep going back up. During 12, it's mayhem. You don't want to be trading at 12. So you would have considered this trade as a loss because it did not reach your desired liquidity pool, right? Your internal liquidity. So that's a loss. You want to journal that. Oh, we didn't get to journaling yet. Forget what I said. But yeah, that's our trade for the day. Okay. You would have been more likely to want to take shorts, but there wasn't really an entry for that. Let's move on to the next day. So this is what you call back testing. Okay. That's where you go by TradingView Premium or use FX Replay. FX Replay is pretty good. You can recycle free subscriptions with like your credit card and just cancel them before they charge you. You know, that's what I used to do. And you should be good. Let's head on over to the next day. Let's just remove everything off of the screen. And let's hop on the 4 hour. What is this? Tuesday. Oops, I did not. Avert your eyes, people. No, never mind. We're good, actually. Okay, cool. Let's mark everything out. On the 4 hour, or sorry, on the daily, we have a fair value gap right here. Tapped into, runs back up. Hop on the 4 hour. We also had liquidity get tapped. What is this? Sell side liquidity? I'm not doing the thing again. I'm way too tired to be known the names of that. Right? And then we have a reaction out of it, right? Liquidity gets swept, fair value gap. And then hop into 1 hour. Let's mark out market open. Right there. Boom. Sorry, let me actually do this. Market open right there. Let's select this bar. And then let's mark out the macros. Up in the 5 minute. Macro number 1, macro number 2. I make the macros purple. I like to keep the market open as white. If you guys would like to as well, you can also do this. If you want to know what's happening in the macro at all times, take your box tool, drag it from 9:15 until 10:10, and then click extend. Oh, you actually can't do that. Oops. I guess what you could do is just manually extend it down and up like that. And then you can make it whatever background or color you want, just to let you know that if you're in this range, we're in the macro. Anyways, let's bring out our indicator tool again. Okay, so we have our liquidity pools back out. London low, let's mark that guy out. London low. Let us lock that up. Let's mark out Asia lows down here. Asia low. Perfect. Let's mark out these New York highs. Perfect. And let's lock it up. All right, amazing. Now let's identify what kind of market structure that we are in. And let's also mark out these highs right here. These are pretty important. The most recent highs. Okay, let's identify the market conditions that we're in. So on the higher time frame, on the daily, let's go to the daily. We're in a downtrend. Perfect. On the 4 hour, we are in an uptrend. Why are we in an uptrend? Because, oh, actually, we're not, because this would be the most recent high and we didn't close above it yet. So technically, we're not in an uptrend. Let's look at the 1 hour though. And the 1 hour, we just about closed. So if we mark this out right here, this would be our breaker structure. Just about closed above this previous high. So there, BOS. So this would be on the 1 hour, well, I guess you can say 1 hour BOS. Breaker structure. Perfect. So now we are officially in an uptrend on the 1 hour. However, on the 4 hour and the daily, we are still trending down. So if we were to be looking for a long here, we will be looking for a reversal, right? A reversal to fill in imbalance to continue going down. Okay. Let's also mark out our other confluences here. So nothing on the 4 hour. Well, perfect. On the 1 hour, we have a 1 hour fair value gap right here. Let's drag that guy out all the way to the right, lock it up so we don't accidentally move it. And then on the lower side, we have another fair value gap. Let's mark it out, lock it up. Okay, perfect. Now, here's what I want. There's a lot of lines on the screen. I apologize for you guys. I'm just going to hide it real quick for a second. What I want to see is I want to see price. If I do, yeah, it's going to bring everything back if I do that. Follow my mouse, I guess. I want to see price. Since we have broken structure towards the upside in the 1 hour, still a high time frame. Remember, our trades are not going to be longer than an hour. They're going to be 20 minutes, 10 minutes, 5 minutes. So we can trade on that time frame. Okay, I want to see price trend down, fill this fair value gap. Since we have broken structure towards the upside, I want to see continue going up. But in order for us to continue going up, we do need to come down at least once. Fill this fair value gap right here and then continue heading up. Okay, so let's see if that plays out. And this is London low right here. This is actually perfect. What I want to see us do is take London low, fill this fair value gap to keep going up. Let's hop in the lower time frame. It's a 5 minute. Okay, let's see if that happens. So that's what I want to see happen during the day. So pre-market, we are doing that. This is our market open right here at 9:30. Okay, we take this overnight liquidity, have a very, very, very strong reaction off of it. But remember, it's literally 5 minutes after market open. You don't want to be trading these conditions because it could literally just come right back down or just keep going up. Like you don't know, okay? So there it goes going down, right? See, exactly. So now this is the trade that we're looking for. If I were to go to the 1 minute, if I could, I would. Let's hop in the lower time frame. Our London low gets swept. Well, it's already been swept here, but whatever. Our London low gets swept here. Our fair value gap gets tapped into here, right? Now I want to see a strong rejection off of it for us to continue going up. Okay, if we were wanting to go short here, we would be looking for a break of structure towards the downside, meaning that this prominent low would get broken below and closed below, which it hasn't yet. It's just had a strong reaction. So let's see what happens in the next 3 minute candle. Wow, look at that, a strong reaction. Now let's look for our entry model, okay? Right here, we would be having an inverse fair value gap. I wish I could go to the 1 minute, I really can't. Maybe I can go to the 2 minute, that'd be kind of cool. Nah, I can't. I guess pretend that there's a fair value gap right here and it gets closed above. Just pretend, okay? I wish I could show you, but there isn't. Okay? Then what we would do is take, because we're still in the macro, right? And I guess what the macro wanted to happen within was just, why did it? Yo. Okay, then. My trading view just bugged out on me. Let's say we have our stops at these recent lows and we want to target this data high. I'm assuming this is some kind of news candle since it, like if it's like super volatile, it's likely that news happened during this time. So yeah, this is going to be our trade. We're targeting internal liquidity for us to keep going up. Why? Because we tapped into a higher time frame PD array, premium discount array, which is our fair value gap right here. We swept London low, which is our drawn liquidity. And then we are also in a uptrend on the higher time frame. Therefore, I want to see us continue to trend up because this right here was our move down to continue moving up. And we inverse this made a fair value gap. And let's see what happens here. Boom. Okay. Rejection off of the upside. Okay, let's see if we retest this fair value gap and see if we keep going up. Nope. Yep. Nope. Nope. Stopped out. Like I said, it's not always going to do what you want it to do. For the people that wanted to buy shorts today, you could have definitely done that if you were targeting this drawn liquidity. And this is like I said, I really can't show you guys exactly how the trades work because I can't even access the 1 minute because the data doesn't go that far back. What you could have done here was drawn out this inverse fair value gap, then saw that it got inversed, and then yeah, no, I don't know what kind of short entry you'd be taking here. Actually, don't forget I said that. But anyways, we did come really further down into the fair value gap here because we only just kind of tap into it here. This will still have been no. My trade is a good trade. What I just took right there. Just because it didn't work out doesn't mean that it's never not going to work out, right? Let's see what happens here though. Yeah, it's just some chop. These are bad market conditions, especially after it being 11. Let's just see if this does continue going up based off of that. Yeah, this is just some chop. Not really that much else to say. But yeah, this is what I mean by going over the analysis and the trading before market open, right? And you want to mark out what you want to see and then watch it play out in front of you. So like I said, it would be a lot easier if I could show you guys like in real time, and I do host those calls on a daily basis and everything. But yeah, that's kind of how you structure a trade, right? And kind of how you determine your daily bias and your pre-market analysis. So to recap, you want to be looking for one of two things. You want to be looking for a continuation or a reversal, okay? So today's trade, right? This is a reversal leg, okay? Because we have entered an uptrend on the higher time frame, and we fill this imbalance to keep going back up, right? However, if we're looking at the higher time frame, we're still short. So if you want to catch a continuation, you'll be looking for shorts, right? It's a little intricate, you just need to practice it as you go along with it and collect your data day by day. And that brings me to journaling your trades. I'm going to get into that right now. And in this video, that's how you do kind of your daily bias analysis. Like I said, you guys kind of need to see it to be able to actually do it. That's why I personally don't like backtesting. I actually hate it. Honestly, like the only reason people should ever backtest is to collect data on their model so they can feel confident in using it. That's it. But I've been on the chart for so long, and so have a bunch of other people that I know, that when they see something work, they know it works because they've just used it so many times, right? Like law of accumulation. So yeah, that's why you got to go on about this day by day. Anyways, I'm going to get into journaling in the next video. Thank you.